I'm speaking to Peter McGuire of XM.com this morning. Peter, welcome to the show.
Thank you, Will. Lovely to be here.
News and signals from around the world. Knowledge is power. Power is knowledge. Talk me through what's moving, what's trading.
I think a couple of things, and good morning, Will. That we worry about where the US dollar's travelling. That's King Dollar, and we've seen some dramatic moves over the last couple of months.
King Dollar, why?
King Dollar, quite simply because it's the reserve currency of the world. We understand that the number one economy in the world is the US, and there'll be a few years yet, I think maybe a decade or so, that China is vying for that space. But at the present time, dollar is it, and it's been very much range bound, that 96 to 101 as far as that US dollar index. So it's travelling a little bit further to the south than what many analysts would have thought, but we've seen a tremendous rally to the upside as far as equities.
Pete, we're talking about signals that drive buying behaviours. What are you seeing in the key areas that you trade on the platform?
I think you've got to look at fundamental news. What's happening from world events? We talk, we've got coronavirus, we've got healthcare issues, we've got economic cratering across many different nations and, of course, countries. And then you're looking at global demand. What is happening? And then you look at the technical analysis. So the fundamentals, then you look at the technicals, moving averages, as far as stochastics, relative strength index, all of those frameworks need to be considered from a trading perspective. And then you're looking at a market that doesn't sleep 24 hours a day, 5 days a week. So it's open, regardless of where you are on the planet. You've got a market to trade, and that's truly the attraction with global markets.
Talking a bit about the XM for a minute, I make reference to the XM Live Education Panel, and we spoke about that. Speaking here about signals that drive buying behaviours, and critically, we all need to be aware of what those signals are, some Absolutely. Of the key drivers of the behaviours that we want to be buying into, but importantly, we've got to know when to get out.
Well, exactly right, and that's the other thing, don't marry a trade. So I think what people come to a point, many traders, they look for too much blue sky, regardless of what market you're trading. Sometimes you think, well, there's further upside in this, and all the patterns are showing that there's actually ready for a retracement. And some traders get overconfident, and there's a bias there that needs to be considered. I think if I was ever to do a PhD, I'd love to do one in behavioural finance because it's so intriguing what goes on to the mindset of a trader. And remembering that many traders are very much long-centric. In other words, they're waiting for a bullish turnaround, whereas I think more seasoned traders are conscious that markets correct and correct violently, and they look for that opportunity. So you can make just as much, if not more, because markets traditionally fall quicker than they rise.
So talk to me about some of the signals that we're seeing in the market that are really moving markets.
I'm looking at the moment, I'm very conscious as far as the US economy, because that's the leader. We're also seeing what the numbers are as far as coronavirus. So we've seen a dramatic rally to the upside since really April, end of March, US-led, and all the central bankers just kicking the tin. And, it's pedal to the metal as far as what they're prepared to throw behind this. So that momentum, when does it say enough's enough? And I'm not sure. We saw overnight there was a little bit of a hiccup. And so those numbers are ratcheting back up as far as, they're not only ratcheting up, but growing exponentially, those corona numbers. So do we see a second phase of lockdowns or a third phase? We know what's happening in Melbourne. We're in Sydney, but think about Florida, think about California, think about Europe, all of those big markets. So the impact is going to be, I think, quite incredible, and considering we're about 100 odd days from an election in the US. So these are very interesting times from a trading perspective.
Okay, so we're talking high COVID numbers, low interest rates,
record low interest rates,
strong interest in gold,
yes.
Which is pretty normal in this type of a scenario, isn't it?
Yep. Well, we're at 1810 roughly, and we had 1920 as the peak, going back about 6 or 7 years ago, or maybe 7 or 8. So that's been very, very strongly bought over the last, say, 3 to 4 months. So I think from a trading opportunity, many traders have said we want to be behind this for these reasons. US dollar, interest rates, stimulus, fear. So as a market goes through many different emotions, we go from fear to greed to euphoria, and it's certainly euphoric at the moment, and we're looking at those numbers coming out of Chinese equity markets. All of those frameworks or emotions or sentiments drive a market. And we've just got to see what happens over the next month or two, because we could see Trump administration doing, I think, some disruptive mindsets across many different parts of the world. And I think It's very, very interesting. I don't think the average layman really realises what's going on.
Well, let's dig into that a little bit. I mean, Trump's relation to the UK is interesting. He's there, he's not, he's there. Boris and Trump must get on.
They do get on. I think they've got very strong, not only do they look similar, they could be distant cousins, but I think that there's a general, I think, respect for each other. That seems to be portrayed. I'm not sure, maybe I'm a little bit, insensitive to it, but I just feel that sort of UK has always had a strong relationship with US, and US has always had, I'm talking about for centuries. This isn't just a short-term thing. This is centuries old, and I don't think that Trump is the sort of guy to walk away from that relationship. If, and we've got Brexit talks at the moment.
I think pound's moving?
Pound, yeah, it is moving, but it certainly hasn't had a strong recovery like we've seen other currencies.
Feels like a long way to go.
I think it does, and I think the fear factor, we're still working through that Brexit. We've got talks renewing again over the next matter of days. If they do play in the Eurozone plays considerably harder ball than what Boris and his team are really wanting, then I feel as though Trump may take a very active step on that, and that could be to increase tariffs as far as Euro goods. It's very, very interesting.
Where do you see Asia sitting overnight? There's a few headlines that are probably worth calling out in terms of a relationship change or perhaps a further disintegration.
South China Sea, that seems to be ratcheting up. Peter Navarro, you're looking at Donald Trump, all of those, and US, mindset. Whose waters are they? They're $3 trillion worth of goods or supply, as far as supply chains, trade through that region per annum. So it's a huge part of our daily existence.
And we're not talking just shipping oil here. We're talking goods. We're talking
every manufactured good that comes from Europe to China, or from China to Europe, or from our goods going in there, iron ore and so on. We're trading at record numbers, and we've been very favourable considering what Brazil's going through. If you look at what the big picture, you're thinking coronavirus impacts there. So we've been able to pick up from Vale's side as far as the iron ore, we've been able to will take advantage of current market conditions, and it's played very favourably for Australia.
In many ways, there's probably some suggestion that that trade in its own right really kept or gave the government confidence to drive the stimulus packages here to keep us flying.
Well, exactly right. JobKeeper, JobSeeker, all of those frameworks, and I'm not sure how that trades out after September, October. There's talk, and it's a little bit still unknown to the layman in the street what exactly the government's prepared to do here, and I think time will tell how that rolls forward. Our businesses, we're thinking of as far as zombie companies, all of those sort of mindsets put me back to Tokyo 89 when we saw that crash as far as the Nikkei. So we're entering back to that phase. Record low interest rates, companies that really should have failed are kept alive. So that zombie reference is very much a part of who we are and what we are.
Rolling into another reporting season, not too far away.
Days away in the US.
What are we thinking? I mean, there's plenty to talk about, no doubt. Some of these, the conversation we're having clearly is going to be weighing very much on the minds of executives in the US and certainly here in Australia in another month or two.
You bet.
What do we think? What are the signals?
The signals are, where does the VIX trade? Because that's the fear index. Do the companies in the S&P 500 maintain that growth? The NASDAQ stocks, you've seen dramatic numbers coming out of Amazon. Think of what we've done as far as Alphabet, Facebook. All of the big tech stocks are doing incredibly well. They've prospered from these times.
Here in Australia, you talk Afterpay. It seems to make a headline every day.
Wow, it's just a wow. You have a look at the stock price. It's just parabolic. So does that continue to the upside? And I know behaviours change, and people, it's a little bit like trading. The appetite's there because people have got more time on their hands and they're taking advantage of moving markets. So it seems to be, as far as that earnings season's concerned, what's going to happen over the next week will really dictate, I think, the general theme over that earnings season timeframe. So it's too early to call. We understand guidance, we understand what CFOs are saying, and to the layman investor, the retail side, he's just waiting to see the numbers drop because these are uncharted waters.
Well, let's dive into numbers for a minute. Yeah. I mean, it was reported in the AFR here in Australia that there's nearly $9 billion of retail investment pouring into the market as at now. Presumably that means that the instos are pulled out and sitting in cash.
Well, they could well be. I mean, but there's no benefit there when you think about cash. So you're not going to earn any money there. But the other side is as far as fear. And that's where we spoke earlier about the gold trade. So that fear entering the market has taken on board a push, certainly, considerable horsepower to drive it further. The other side that I think many retail investors, this is the true essence, Will, that needs to be considered. How long is the trading horizon for a trader? So we've got traders that might be trading for 5 minutes. You've got hedge funds that might trade for 5 seconds. People will go, what? I'm here for 5 months, 5 years. Well, hang on a second. Why hold a trade? How long do you want to be? This is the point I made at the earliest. How long are you exposed, and do you marry a trade? So what's your thought process? With derivatives and retail and the FX market, the largest in the world, trades about $6 trillion a day, the depth and liquidity is enormous. So the benefit there is that people can trade, or retail investors trade on a market going up in value or going down in value, and they can change direction on a heartbeat. So it's not as though, hang on a second, I've got a stock that's, the market's shut, 4 o'clock in the afternoon. Now, this thing's open 24 hours a day. So that's the differential. So that's where traders look at, yes, that $9 billion, as you said, firepower that can go to stoke a market. But the other side is...
It's come from retail.
Of course it has. That's exactly right. That's their home. Where do they use those funds? Do they stay only long equities? Hang on a second, I've got to be long. No, you look at hedging. The point that quite fascinates me, females are the owners of capital. Females, you go to university, post-grad studies, big percentage of the ladies in the class doing finance. So all of that knowledge they take on board, they hedge positions. I'm long these stocks. Hang on, what am I doing? I've got some options that I'm also using as a protective measure if in case the stocks fall. So it's a very educated, predominantly educated marketplace that is constantly aware of risk profiles. Don't marry a trade. How long am I in for? Where am I going with this particular move? So that's the part that I think is underplayed, and it's a large context of who we are and what we are.
So in saying all of that, are we seeing anything new? Are we looking at new players in the market?
Yes.
Are there new strategies in the play? You referenced if you like, the life cycle of a trade.
Yep.
So again, have the signals changed? Are we looking for new signals to trigger buying and selling behaviours? Or are we needing to be more informed? Because as we said before, news and knowledge is power, and the world is moving very quickly.
It's out there. I spend, as I said, 7 hours a day probably watching TV. What do you do? Well, I watch TV for a living. But I need to know what is current. I need to hear from, the chairman. I was watching CNBC this morning. The chairman of the World Economic Forum saying we're not going back to normal. I need to hear what the head of the World Health Organization saying. I need to know what these global players and actors are discussing, because they're the impacts that markets take. It's all sentiment driven. I need to know what are the numbers coming out of coronavirus. I need to wake up at 3 o'clock in the morning because just so happens I live in Sydney at the moment. I'm not travelling, but New York's open. It's middle of the day. And I need to know what's happening in New York, because like it or not, Will, we get a flavour, or we get our feelings from what's happening in the biggest market in the world. No other market really dictates where we're going. If we see a dramatic sell-off as far as US equities over the next matter of weeks, I'm sure that it's going to drag us lower. I think if Aussie markets collapsed, the US would still continue an upward theme, because we're not the player. We've got 25 million people. They've got more people in Florida than what we've got in Australia. So that gives you some sort of indication. You've got 4 states over there, Arizona, California, Texas, and Florida, with about a third of the US population, 110 million people. That's a powerhouse. So that's what I want to be a part of. I want to hear what's going on. Those themes are very important from a trading perspective.
Okay, so moving on from people looking at populations, thinking about markets where they sit today, the low interest rate environments, the central bank stimulus programs around the world, looking at what's happening down through the marine corridors into Asia.
Yep.
I mean, if you wrap all that up and then you sort of think about where we are, what do we say?
What do we say about Hong Kong?
What do we say about Hong Kong?
So there you think, righto, 6 months ago, what's happening? We've got protesters on the streets, we've got civil disobedience, we're doing this, and this. Now, I haven't heard anything about Hong Kong. I'm not living there, but I haven't heard anything, at least in the last probably week. So obviously the impacts as far as China's concerned has had a greater impact to the residents of Hong Kong. What's happening as far as Singapore? What's happening as far as different parts of Asia? I think everyone's in that state of shock.
We don't hear a lot about Jakarta.
No, we don't, and a huge population and very, very savvy and coming up the consumption curve as far as a middle class, exploding middle class, very similar to India in a lot of ways as far as demographic. Huge entrepreneurs, massive, very well educated and very, very conscious as far as where they play geographically and economically into Singapore. Only a stone's throw away from Singapore. Is Singapore going to be the new hub? Do we see Hong Kong changing its political landscape and companies saying, well, I want to go somewhere a little bit not as confrontational? Is Singapore going to be it? So I think there's a possible changing of the guard at the moment. All of these undercurrents that greatly impact trade, but more importantly, what does that do to their currency? XM, and I'm not here to sing its praises, but it's all about retail investors given an opportunity to trade on a market that markets are moving. And these markets are global. So it doesn't matter if you're in Brazil or Botswana, you've got those markets and that gives the trader the opportunity to participate. So I think that's the nuts and bolts of everything. Those critical thinking processes that allow traders to take advantage of markets, I think that's the new frontier that many retail and the 20s to 30 to 40-year-olds want to be a part of that because they're educated. They've got the access to technology. All you need is a smartphone. Bang. You do it all off there and it's open 24 hours a day. But it's more than that. I think it's a sexy thing to do because you're stimulating your own brain. And that's, a lot of people say, oh, I want to go and watch this or I want to go and do that. This is global economics. This is fundamental analysis. We educate our traders about 12 to 14 hours a day live. And what was relevant yesterday goes in the rubbish bin today. That old adage, yesterday's news is today's fish and chip wrapper. Well, it's that's a constant theme across the globe. And that's the attraction with these markets.
Summarise this for me. Where do we sit today? We saw news overnight that suggests some changing, the dynamic some policy impact coming that'll continue to flow through out of Asia. The US is getting higher COVID numbers, low interest rates. Gold's clearly on the buying tablet for most people. There are other precious metals out there moving too,
silver.
Yep.
Industrial demand.
And we haven't spoken about oil.
No. Oil. We'll start with the last one first. Oil is oil. Oil is just mind-blowing what we've seen in the last quarter. We got cratered. We actually went to negative $38 a barrel. So they paid you $38 to take a barrel out of you because you couldn't store it. So that was on the futures market at that expiry date. We're now at about $40 a barrel, approximately. We've grown consumption 18% in the last quarter. Now, that's the best part of about 17 million barrels. So that huge growth to the upside, what that is a barometer as far as global demand. So we're driving a car, we're driving a little bus, we're in a boat, we're in a ship, we're doing whatever, not doing so much flying, but all of those impacts as far as consumption. So we've seen a very big demand increase. Will Corona and further lockdowns impact crude markets? I would say yes. So I think that the market's probably fairly well grown. And there's an interesting online, I normally travel to Vienna twice a year to go to the OPEC meetings, where the next one's tomorrow, but that's going to be online, the JMMC meeting as far as those 23 member countries. So there's the first part. The gold story, yes, precious metals, US dollar fragility, but more importantly, global economic fragility, because it's all stimulus-led. Every central banker saying, pedal to the metal. There's no escape. We're just giving whatever's required because we understand the other side of it. Are we in a depression? So I'm not here to sing those songs, but I think these are very interesting times. The third part of it is, do we keep that growth story going forward? Well, there's going to be trade and there's going to be exchange of goods and costs. So I don't think that mankind's going to lock up because we need so much that's made at all different parts of the world. But I think there's going to be a change in behaviour as far as where goods are manufactured. Because President Trump's taking that, Peter Navarro's taking that, the US and very much Australia's thinking that. You've only got to think of Morrison. He's looking at what can we do here to stimulate our economy. We need to do things. We need to build things.
We're back to supply chain economics.
Absolutely, and that doesn't change. So in that, the next 6 months, or leading up to Christmas, I think is going to be one of the most delicate and interesting time frames in modern history.
So we're talking short-term rocky road, long-term positive outcome?
I won't go as far as the positive outcome because that's painting something that I don't think we're there. I think we're painting a different picture to that with those COVID numbers and the uncertainty. Uncertainty creates fear. Fear creates a time in the market that, say, if we get dud earnings, we have more risk or more fear in the market. I think traders will come back and go, well, hang on a second, I've got to look at other markets to trade, take my dollars off the table. And there's the first part. And the uncertainty creates, that strips out, I think, that euphoria. I might be wrong, but I can more or less smell it. I don't think that euphoria is the same euphoria that we had in mid-June. Here we are in mid-July, at 15th or whatever, the 14th of Bastille Day. We should go out and have a croissant. So there we are. I think it's a very interesting landscape over the next 2 months. And with that election, I don't think anyone has realised what President Trump is prepared to do over the next matter of months, if not the next month. That election.
The key question here is, does he want another term?
I think that's I think Machiavelli answers that when he says there's no substitute for power than absolute power. So I would say yes, he does. I think he's bored easily, so I think he wants the kick, and I think that he's in his own mind's eye going, I'm halfway through the process. I've got 4 more years to get a lot of stuff done. I might be wrong, but I think, and I honestly think, put him to bed at night and you ask him in the dead of night, do you want another 4 years? I'd say, yes, he does. That's what I see as far as his behaviour. That's what I see as far as his personality, and he seems to radiate that. I might be wrong, but that's what I see.
Peter McGuire, xm.com, thanks for playing.
Thank you very much, Will.